Hi everybody. This is the recording lecture for topic 3. Uh, like I have announced in the WhatsApp group, uh, for week 3 and week 4, the lectures or learning is done uh, using the uh, methods other than the face-to-face lecture. Sometimes I will record lecture, and also I will share readings, exercise, and videos also. Okay, I think I have covered uh, slide number 1 to 15 in the lecture. So so now I will start with from slide number 16. Okay, so this topic is about the manufacturing cost. You have learned in the previous lecture, uh, in accounting, if somebody asks you what are the manufacturing costs, the answer is manufacturing cost equal to direct material cost plus direct labor cost plus overhead cost. I think I have made a very simple and hopefully very clear example in the class about how we can calculate manufacturing cost. I think our example that we have used last week is let's say you have a cupcake business. So how to calculate the manufacturing cost for your cupcake? And another one, maybe I have also explained a bit what happen if you have a soft drink business. Very simple product. So if you want to calculate manufacturing cost for your soft drink per unit, so how to calculate that? How to do that? So you have to calculate the direct material cost plus direct labor cost plus the overhead cost. Okay, so like I said also, the focus of this management accounting is always on the manufacturing business. Most of the time, it is focusing on manufacturing business. So, so you have learned that manufacturing cost equal to direct material cost plus direct labor cost plus overhead cost. Now in this slide number 16, you are looking at the cost flow in the manufacturing business. So cost flow is like this: how your business will pay for the cost, and also how to do the recording. Remember in financial accounting, when you purchase material, when you sell your finished product, uh, you have to record them in the journal, so that later you can prepare the financial statement and do the external reporting. So this cost flow is related to the recording in the journal. Okay, let's see. So let's say imagine you have a manufacturing business. Let's say you have a factory that produces soft drink. So when you want to do the production, the cost flow is like this. First, you have to purchase the material. You have to purchase the bottles, the sugar, the water, the ink, the flavor, etc. So see the first point there. The material is purchased. You purchase the material. So when you purchase the material, where is the place to record that transaction, the purchase transaction? So the cost of the material, or the amount that you pay for the material, is added to the raw material inventory account. Remember, if you have a manufacturing business, you will have three type of inventories: the raw material inventories, work in process inventories, and the finished goods inventories. So when you purchase the raw material, you record the purchase in the raw material inventory account. And see the second point there. Direct material are consumed in the production. So the second thing that will happen if you have a manufacturing business is you will use the material to produce your product. So when your business use the raw material to produce a product or to make a product, then see the second point there, cost is removed from the raw material inventory and added to work in process inventory. So when you use the material, you take out or credit account raw material inventory, debit the account of work in process inventory. Okay, next thing that can happen, that will happen if you have a manufacturing business. So when you have the material, you also, and then you use the material to make product, you also will the process to make the product will involve the direct labor and the manufacturing overhead. So every time you use your labor and every time you consume your overhead, you also have to record the amount in the work in process inventory account. Okay, the next point is, see here, the first point in this slide is when you have completed your production process, the thing that you have to do is costs are transferred from the work in process inventory account to the finished goods inventory account. So the cost will jump from raw material inventory account to the work in process inventory account, and then when the production process is completed, you transfer the cost from the work in process inventory account to the finished goods inventory account. The next point, when the product are sold, costs are transferred from finished goods inventory account to the cost of goods sold. Remember when you prepare the income statement, one of the item that you have to show in the income statement is the cost of goods sold. So when you sell the product cost that you have recorded in the finished goods inventory account will be transferred to the cost of goods sold account. And later, when you want to calculate your profit, the cost of goods sold has to be deducted from sales revenue to determine the gross profit. So there are several accounts there. Account raw material inventory, work in process inventories, finished goods inventories, and then cost of goods sold account. So see the first point here, raw materials, work in process, and finished goods inventory balances will be reported in the balance sheet. Cost of goods sold account will be reported, or you have to report them. You have to report the account in the income statement. Schedule of cost of goods manufactured and schedule of cost of goods sold summarize the flow of the manufacturing cost. Okay, so the flow of the account is like this in the slide number 19 if you want to see the flow. So see here, when you purchase your direct material, you have to record the direct material inventory account, and then when you use the material, you have to transfer the record in the raw material inventory account to the work in process inventory account. At the same time, you have also to record the direct labor cost and the overhead cost in the work in process inventory account. So when the process of the making of the product is completed, you have to transfer the cost into the finished goods account, and then when you sell them, you have to record in the transfer the amount or record in the cost of goods sold. Okay, now we are focusing on the income statement for a manufacturing business. So how to prepare the income statement for a manufacturing business? See here this slide. Okay, the income statement for a manufacturing business is more complex compared to the income statement for a merchandising business. If you have a merchandising business, the income statement is simpler because you have to uh, the cost of goods sold is simpler to calculate. To calculate the cost of goods sold for a merchandising business, you have to show the beginning inventory plus the cost of goods purchased, and then minus the ending inventory. Simple. Because a merchandising business purchase things from supplier and sell them back, sell the same thing to the customer. So to calculate the cost of goods sold is easier. But if you have a manufacturing business, um, the business is like this: you have to purchase raw material, and then you process the material, and then you sell finished product. So the business is a complex business compared to the merchandising business. So when you prepare the income statement is more complex. So when you want to calculate the cost of goods sold for a manufacturing business, firstly you have to show the beginning finished goods inventory, and then you have to add the cost of goods manufactured. Why you have to add the cost of goods manufactured? Because a manufacturing business manufacture something. So this is where you apply your knowledge related to this topic. The cost of goods manufactured is equal to manufacturing cost, which is the direct material cost plus direct labor cost plus overhead cost. And then you minus the ending finished goods inventory, you will get the cost of goods sold for a manufacturing business. This is not very difficult actually. So when you prepare the income statement, in the section to calculate the cost of goods sold for a manufacturing business, the calculation of cost of goods sold is like this. Cost of goods sold. So to calculate the cost of goods sold, first you have to show the finished goods inventory. In this example, £90,000, and then plus the cost of goods manufactured, £370,000. In this example, the total is £460,000, and then minus the finished goods inventory. In this example, £80,000. The cost of goods sold for this manufacturing company is £380,000. So this is how to calculate the cost of goods sold for a manufacturing company. So when you want to, for as like you have seen in the previous slide, when you want to calculate the cost of goods sold, you have to find the how much is the cost of goods manufactured. So to calculate the cost of goods manufactured, the calculation is not very difficult. Okay, this is the way to calculate the cost of goods manufactured. You have to prepare a schedule like this. Everybody has to know this. Everybody has to know how to do this. Okay, the format for to calculate the cost of goods manufactured is like this. First, you have to show the work in process beginning, or at 1st of January. The work in process beginning for the accounting year. In this example, the accounting year is started at 1st of January. After that, you have to show the manufacturing cost, direct material cost for this business. The direct material cost is the amount that the business pay for the material for that accounting period. So when you want to calculate the direct material cost use for that accounting period, the calculation is like this. First, you have to show see here, the beginning raw material plus the purchase of raw material, and then minus the raw material inventory ending raw material at the end of the year. So then you will get the direct material use. In this example, the direct material use is 146,400. After that, you have also to show direct labor cost. In this example, 175,600, And then after that, you have to show the manufacturing overhead cost. There are many manufacturing overhead costs, remember? In this example, the manufacturing overheads costs are indirect labor cost, factory repairs cost, factory utilities cost, factory depreciation, factory insurance cost. Total for the overhead in this example is 54,800. So when you add the direct material cost plus direct labor cost plus overhead cost, you will get the total manufacturing cost, which is in this example 376,800. So you add this number, work in process beginning plus total manufacturing cost. In this example, you will get 395,200. And then you minus the ending work in process inventory. In this example, the ending work in process inventory is 25,200. So you will get the cost of goods manufactured 370,000. So you have to know how to do this. You have to know how to calculate this. When you get the cost of goods manufactured figure, only then you can prepare the income statement for a manufacturing business. Okay, before that, see here, if you check the lecture notes, I have added a blue box here in this slide number 23, maybe slide number 23. See here, sample question. In that blue box, there is a link to a YouTube video. So if you click that link, you can see a sample question. A sample question about how to calculate cost of goods manufactured and also cost of goods sold for a manufacturing business. Watch that video. Okay, let's see here what we have here. I think this is maybe a sample question or something. Following information is available for Kim Limited. Amount are in thousand. Prepare the cost of goods manufactured schedule for the month of March 2020. So that data are monthly data. Started from 1st of March to 31st of March. You can see here there are raw material inventory data. Beginning 12,000, ending 10,000. Work in process inventory beginning 2,500, ending 4,000. Material purchase in March 90,000. Direct labor in March 75,000. Manufacturing overhead in March 220,000. So the question asks you to calculate or prepare the cost of goods manufactured schedule for the month of March 2020. So how to prepare that schedule? You can see in the previous slide the format of that schedule. Use that format to prepare the cost of goods manufactured. Okay, so you put the number here. How much is the work in process beginning or March 1st, and then for the direct material, remember to calculate the direct material use, you have to show the beginning direct material plus purchases of the direct material and minus the ending direct material inventory. You will get the direct material use, and then put the direct labor amount here, and then put the overhead cost amount here in this blank space, and then calculate the total, and then minus the ending work in process inventory. After that, you will get the cost of goods manufactured for this business. Okay, see here, the numbers are here. Make sure you know how to do this. Okay, this is the way to do it. Everybody has to remember the format, and everybody has to know how to calculate this. and also how to prepare the income statement for a manufacturing business. Okay, this is about the balance sheet for a manufacturing business. Okay, balance sheet for a manufacturing business is same like balance sheet for a merchandising business. Same, except in one section. Uh, the exception is here in the inventory. Remember, inventories are current asset. So when you prepare a balance sheet, you have to show inventories under the current asset. So if you prepare a financial or a balance sheet for a manufacturing business, the the inventory comes in three types: finished goods inventories, work in process inventories, and raw material inventories. That's all. If you prepare a balance sheet for a merchandising business, the inventory is only in one form, which is the finished goods inventory. But for a manufacturing business or a company, it has three type of ending inventories. That's all. That's all for this topic. Uh, you check the Putra Blast. There I have prepared for you the lecture notes, link to this video, and another one is the exercise. And the readings. Okay, that is for week 3. Thank you very much.